Hey traders, happy hump day, happy Wednesday. Hope you guys are doing great. As always, everything in this presentation is for educational purposes only. Start here with the SPY, the S&P 500 ETF as usual, up about 0.5% today, sitting there at fresh new all-time closing highs. Again, bulls have the edge. If we were to look at something different for a change, like maybe the mid caps, ticker symbol MDY, if I zoom out, just like the Russell 2000, we still need to get above these previous peaks. So if you're watching the mid caps, probably, I mean, you just got to round it off. Maybe 363 would get us over those peaks, then the all-time highs. It's looking pretty, closely identical to the Russell 2000, where the Russell needs to get above that 160 area. Had a question on the transports. Well, guess what? The transports sort of look like the Russell and the mid caps. They've been in a multi-month trading range, almost year-long trading range. The transports have support down there at 175. We closed around 191, but here's a peak, then there's a peak up here, then there's a peak here. I would say pretty much above 200. That's a big trading range, but that's what it needs to break in order for the bulls to have a bigger directional edge or the bears having a bigger directional edge to the downside. So just keep an eye on those two levels. Now, Facebook and Apple are out after the bell. If I zoom in here, Facebook closed at 188.25. As I do this video, it's about 4:50 p.m. Eastern. You can see we're at 190. It's up about $2, maybe $2.50 a share. Not a huge move. It's been going back and forth, was a little higher. We're going to need to see how the stock opens tomorrow morning. And then more importantly, where does the stock close? Where do the bulls or the bears feel comfortable taking that stock into Friday and then the weekend? So even if we gap up or we gap down in a big way yet tonight, there's a big move. It's all about where do we finish tomorrow at the end of the day. Right now, it's looking a little positive for Facebook. If it would be able to close in around that 191 area, let's see, 191 is only going to put us right about there. But if it does open at 191 on Thursday and stay above there, the target would be the all-time highs, back up there at the low 200s, like 205, 206. Now we take a look at Apple, AAPL. Apple last price is 245, and after market we were at 243. We were as high as the 250 area, so maybe another $4 or $5 higher. We came off it a little bit. Apple's just been on a tear. If I zoom out, remember Buffett was starting to accumulate this stock below 100 back when it was at 90. Here we are at 240. Even in January, we were down here in the 150s and 140s. It's been an amazing run. Then we had this scare tactic when the world was going to end, right, in May when the market pulled back. And then it's just been a straight line since. An argument can be made that, hey, it's had a really nice run, it's due for a pullback. But sometimes stocks like this don't pull back if it just keeps attracting capital. I will also be very curious to see how Apple opens and then closes tomorrow as well. No matter what happens tonight, if we drop $10, we pop $10, it's irrelevant. Tomorrow with a full day of trading, where do traders take it home? If we finish in the green, that's positive. And if it becomes a really bullish day and we end up closing at new all-time highs, that's uber bullish from a technical perspective. I also had a question on Pfizer on how it was looking on a daily chart. So when I start and I look at a chart, I usually go back about a year and just take a peek at what it's doing. Sometimes I go back maybe 2 or 3 years just to get some sort of context. And when I look at Pfizer here in a daily chart, I can see it looks like 34, 35, that area seems to be a support level going back into 18. And then if I zoom in closer, somewhere above 44 seems to provide reversal points. And then I see this huge drop. So if I zoom in closer, first thing that pops in to my attention, we're getting spikes in volume. Okay, stock's pushing higher. Yesterday, which would have been Tuesday, it closed above this little peak. Well, right now, the target would be the gap down around 40, a gap fill around 41.50, and then back up to the ledge at 43. Not bad for a potential reward to risk ratio. I mean, it's not huge like we would get in some of these tech stocks where there can be a lot of distance to cover, but there is a lot of free space in here. I would consider a 20-day EMA as a potential end-of-day trailing stop. And how about Herbalife? We rarely talk about this one, but it was a big mover today. I was looking over the biggest movers and shakers up and down. If you go back to February this year, the stock was just north of 60. In September, it's down around 34, $35. We had a big pop on volume, we pulled back, and now we're reversing. It's a good sign, but today's volume spike has been the highest volume since June. And more importantly, why today I think is a bigger deal. We not only cleared a previous swing high, but we took out another consolidation point right around 44 bucks. At this stage, the technical target would be up there near the gap fill, ballpark 52 bucks. Not bad. That could be 20% potentially higher. I would also consider the 20-day EMA here as an end-of-day trailing stop. That's our little red line. But keep in mind, Herbalife can move around a whole lot. So it's a great, I think, trade idea in a paper trading account just to see, can you handle big moves up and down? The stock can easily move 5-10% sometimes in a day or just a couple days. So that's it. Tomorrow I'll be back with you for another video, and we will see and review how Apple and Facebook ended the day. So take care, and I'll see you tomorrow. All the best.